Impressive company earnings drove gains at Nigeria's equities markets last week as all-share index rose 1.4% on the week. Joining me to discuss some of these results is Muktar Mohammed, an analyst at Assar Investments. Muktar, thank you so much for joining us today. We're seeing some strong numbers coming through at the market. It's Q1 earnings season and very encouraging numbers. I'd like us to just quickly take 2 or 3 names rather. I'm looking at Seplat right now from the oil and gas market. The company appears to be riding on the wave of higher oil prices. So we're seeing revenue coming in up 17%, oil revenue rather up 16%, gross profit up 59%. What can you tell us in terms of how the journey of this company and outlook going forward?
Well, as you rightly pointed out there in your introduction, I think it's riding on the base of the higher price of oil, especially for the past 3 or 4 months. So that helps its earning. And this company has been one of the companies listed that has both the upstream and the downstream all listed in the exchange. I remember that the company also have gone through some turbulent time, especially during the downtime of the price of crude oil going down, especially during the pandemic. I think they've started gradual recovery. And we see this pulling through into the other quarters because oil price is not going down yet. And we see the price come up a little bit. And also the management have tried to reduce their terms of expenditure. And also they have done some investment that will begin to key into order of the result, mostly from the second, third quarter. So we expect that Seplat is going to come up with good results going forward, beyond by the type of investment and the price of crude oil at the moment.
Okay, let's quickly move on to Guinness from the consumer goods breweries sector. PAT up 35% year on year. And we're seeing this has been boosted by significantly higher revenue performance and cost efficiency, very important cost efficiency across major expense lines. What can you tell us? It will appear that the company decided to focus strategically on some of its segments, the spirits, the malt and stouts, and they did quite well.
Very well, Esther. What a result from Guinness, especially from where they are coming from. Most of us are not surprised with kind of result we're getting from Guinness because we expected them to do well ever before now. So the result coming in from Guinness is a pointer to how much the company have been able to, in terms of management, like you said in your report, they've been able to manage their resources very well. So for me, it's a very good result, and investors are excited about it. Though that has not impacted so much on the price of the good, but you must not forget that the stock have risen from a low of 52 weeks to a high of about going as high as 31 naira before coming down to 27 naira. So it's a very fantastic result, and they try to look inwardly. And remember that also there was the challenges they have with the payment of tax, which also affected their earnings in the last quarter, and that has reflected now in their bottom line. So it's a very good stock at the moment for any investors to look at, especially when you look at the price difference between Guinness and Nigerian brewery.
Let's quickly take, I think we have about 2 minutes left. Let's quickly take Zenith Bank, a tier 1 lender from the banking sector, the most liquid sector of the market. We saw a growth in earnings, but this growth was actually supported by the bank's non-core income. Major lines recorded declines from loans and advances to customers, interest from investment securities. But somehow we did see a growth in its fees and commissions supporting the increase in the top line. But what can you tell us in terms of? I mean, it would appear that this is a trend we've seen across the tier 1 banks too.
Definitely, Esther. If you see what we're seeing in the negativity we're seeing in the loan payment is not surprising. Especially, you must know the fact that we are coming from the pandemic rebate year, and a lot of all these debtors have not been able to pay for some time now. So I'm not surprised that, but they need to move better because revenue from income and fee cannot sustain your growth going forward. But when you look at the earning per share, it has improved. And also you look at the profit of tax by 5%, and the earning per share also went up by 5%. So that is a good one. But going forward, they need to rejig and see how they can begin to get come back to profitability in other core banking areas that have not impacted positively on the results.